Today is another new video. We want to talk about today. We want to talk about what we call chart patterns. And in chart patterns, we are not going to waste time because we want to make the video as short as possible. We have types of chart patterns. Types of chart patterns. We have a type of chart patterns, and the first type we have the continuation pattern. The second one, we have a reversal pattern. Reversal chart pattern. Then lastly, we have what we call bilateral chart pattern. Bilateral chart pattern. Now today, guys, we are not going to waste a lot of time. We are going to talk about chart patterns. And this one, chart patterns will help you a lot in market analysis, because a technical analysis always is based on the chart patterns, 70% of it. And with this, we'll be able to analyze market without some difficulties. It is very simple, very clear, because we want to make it as simple as possible. Now, without wasting time, today we want to talk about only continuation chart pattern. Then tomorrow we talk about the reversal chart pattern. Then the next time we talk about the bilateral chart pattern. Now, today let us start with continuation chart pattern. Continuation chart pattern. Yes. Continuation chart pattern. Let me remove everything. Let me remove this drawing. We are just going direct to continuation chart pattern. Continuation chart pattern. I had already drawn an kind of a structure, a chart pattern continuation structure, which we are going to use for explanation. Now this is how this works. Let me say you have a structure like this. This is a market movement, and when you have a structure like this market is upward trending. Now, for you to identify a continuation chart pattern, the chart pattern might be a bullish continuation chart pattern or a bearish continuation chart pattern. It depends. The market must either be upward trending or the market is a downward trending. Now, today we are going to work with the upward trending market, because upward trending is an opposite of a downward trending. Now, there is no problem with that. We are only going to talk about one part, and the market should not be moving on a sideways. Continuation, it doesn't want a consolidation market. You won't trade it, because it needs a clear moving downward trending market and upward trending market. Let me say this is the chart pattern. This is what you do. We are going to mark zones. The first thing in market analysis, I told you, look at the structure, look at the trend of the market. The trend is uptrending. And what is the structure of the market? The market is forming what we call high. It is forming high low, then low high, high low, then low high. High low, then low high, high low, low high, high low, low high. That one is this market is upward trending. That one is the structure of this given market. This is the structure of this given market, as you can see. We're going to remove these drawings. They are going to mess up. Sorry guys, these writings have messed us up, but I hope you know what I'm talking about. Now it is moving everything. Let us just move everything. Now let us draw again. Let us now draw this structure again. Let me say the market is here, upward moving, then pulls back, moves, pulls back, moves, pulls back, moves, moves upward, pulls back, moves upward, then breaks the channel. Yes, I hope you can see that. Now this is an upward trending market. Upward trending market, guys. Sorry. Sure. Let me put structure here. Now, this is what you do. You identify key zones. The key zones here are, you come here, mark your key zones. Mark your key zones. First key zone is here. And this is my lower point. This is my lowest point at that given time. This is my lowest point. This is another point, as you can see. This market, let me say the price of this market was somewhere here. This is just a general view, because we are going to use even the real market. Let me say the market was somewhere here. This is how you trade this market. First, identify the key zones. These are the zones. These are the zones. The zones. These are key zones. The key zones are here. The key zones are there. Let us draw the trend line, because this market is on a trend. Because when the market hits the trend line, there is a reversal, or there is a reversal of that given market, the reversal on the direction of the given market. Now let us say this market is trending upward, and there was a break of this market. Then we have something like this. There's something I need to explain. Then there's so now sorry. Now this is the market. Let me say the market was somewhere here. When the market was here, this one was the where the market was. This is how to trade this market. You always enter at the lowest point. This is a upward moving continuation market, which means this market is trending upwards. Now this is what you do. Mark that given point. If you have marked that given point, which is the lowest point, then the highest point, then the market pulls back to retraces, I mean, to the trend line. When the market, for you to confirm that this market is going to go upwards, wait for, because this market has formed a resistant kind of. This place is a resistance. Wait for this resistance to be broken. Wait for this market to break this resistance. Then you enter this market at this given place. Let me show you guys. This is what I'm talking about. Let me say this market was here. Then you wait for this market to pull back, because you are not sure whether this market is going upward or downward. Wait for this market to break this resistance, goes up, retests the resistance, then enter this market at this given place. Take a buy, because we always say that when the market breaks a given resistance of support, you always wait for the retest of that given market, so that you can be sure that this market, that breakout was not fake breakout. Now this one was the market price pulls back, it's the resistance, and this one is the support, is the resistance. uh, then the market breaks the resistance, hits at the trend line, pulls back. Your first entry should be here. Let us name it first entry. mm, this is your first entry. First entry. This is first entry. Your first entry should be there. Then, sorry guys, that one is where your first entry should be. Then you wait. Then the market will goes up, because remember you have a trend line here and you have a key zone. The market, when you have entered here, I always tell you guys that the only sure bet, or the only sure bet take profit is the half of, you measure the distance from the previous low to your entry, then you measure from your entry to the distance. Let us say that your entry was here. Where should we take the profit? It is very simple. Don't complicate these things. This one was your entry. How many pips? You can measure. You can measure it. It is 264, 301. Now this is what you measure. Then from here, that one is 301, guys. Then you know very well that there is 301 from the previous low to the resistance. Now from your entry to the to the take profit, you come here. We come here and measure. Let's measure 300 pips, 301 pips. This is 301 pips. You come here, draw your line. There. Now this is, you know very well that this is now your TP, and we can name it TP1. Now I always tell you that only TP1 is guaranteed. This is your TP1. Only TP1 is guaranteed, guys. Now this one was your entry. This is your TP1. Once you hit your TP1, this is how you trade this market. I always say this is how you trade this market. You always enter at the pullback, because remember, we can have take profits until we have what we call a key zone. Why is the key zone here? Maybe the market was upward moving, then you find a very strong key zone where the market always react. Here, let me say your key zone was here. That one was your final target. That one should be your final target, guys. This one should be your final target. This one, sorry, let me put it that way. Now this one should be your final target. There, let me say your key zone is here. This is your final target, because maybe the market is always reacting at that place, and there might be a reversal of that given market. Now this one should be your final take profit. You can put this one as your take profit 1. Then take profit 2 you can put as, you can mark at this zone. Take profit 2 at this zone. TP2. Then we have TP3. TP3. Now it is always said very well that only TP1 is guaranteed. These other ones are never guaranteed. You know very well that these ones are never guaranteed. As you know, this is TP4. Sorry, this is TP2. Sorry guys, I know you need. This is TP2, and this is TP3. I mean, this is TP3. Let us name it very well. This is TP. This is TP3. TP3. Now, you know very well that you have entered the market. This is your entry. This one is your first entry. Because you are sure that the market will be going upward, and you have created your first position, but you want to enter in very many positions. For you to garner all these pips, you want to enter at very many positions. And I always advise you that you enter at a pullback. You enter at a pullback. Now, when the market pulls back, this one will be your second entry. This one will be your second entry. At the pullback, then this one will be your third and the last entry. This one will be your third entry, and it is third entry and the last entry. Third entry. This one will be your third entry. Yes, this one will be your third entry, and this one will be your last take profit. Now, this one is how to create many positions in this specific market. Position 1 is here. I entered the pullback, then this one is your final take profit. Someone might be asking, where do I put my stop loss? I said that stop loss should be put between 20 to 50 pips. Any movement against you with the 50 pips is considered a reversal of the market, and you should consider that one is an exit from the market. Get it from me, guys. Any movement, any movement, any movement against you above 50 pips is considered a reversal of that given market, and you should always exit from that given market because there is a strong reversal of the same. Now let us say our entry was here. Where should be our take profit, our stop loss? Just come here, move 50 pips. It is just below the entry, just below the entry. Yes, just below the entry. I think somewhere here. Now your stop loss should be here. Yes, stop loss should be there. And the second entry stop loss should be somewhere here. I think 50 pips is somewhere here. Then the third entry stop loss should be somewhere here. Just measure 50 pips below at the entry point. Now another thing we have talked about how to enter at the pullback, create many positions, how to create a position, stop loss. Then the next thing we are going to talk about, how do you garner all this, how do you take all these profits? Someone might be asking, how do you take TP1, TP2 and TP3? Now stay tuned and listen to me carefully. Let me say you made an entry here, and you know very well that when this first entry is TP, you are going to it is going to close this trade. Now what you do, you always sacrifice 10 pips. You always sacrifice 10 pips. Let me say this one was 300 pips. You can even sacrifice 20 pips. When the market is at 280 pips, you move your stop loss from here below your entry from here, then you move it to 280 pips. You move it to 280 pips, or you can move it to here. You can move it to half of that pips, it can be here. Ndio hii pullback isikutoa nje. Unaweza kuja hapa uweke TP1 stop loss yako here. It means that when the market moves up, when the market moves up and pulls back, when the market moves back at the first time, your TP inamaanisha, it means that your TP should be here. TP1, I mean, yeah. Your TP1 should be here. It means that when the market moves here, reverses, your second entry should be here. Then your first entry, you should move 20 pips to your first entry. It means that you're moving your stop loss to 280 pips for you not to be stopped out when the market pulls back. The next, because you know very well that this market has hit your TP1 and it is still continuing with the movement, and you had already entered at the pullback. You can see you had already entered here at the pullback, and the market is moving with the two position into your direction, into your TP1. Remember that this TP1 you would move it to TP2. You would move TP1 to TP2. You move TP1 to TP2, then you move stop loss to 280 pips profit garnered. Let me say this: your trade is approaching TP2. What you do, because your stop loss was at 280 above the first entry, and there was a second entry here, you move all this position 20 pips or 30 pips below, or 30 pips below. You can move it here. You can even move it 100 pips below. It is when it should not hit your TP. Just move it. Let me say the market had pulled back here and it is moving smoothly to your direction. You move the stop loss of the first entry, put it to 30 pips below the second take profit, and also second entry 30 pips below the second take profit. It means that when the market reverses against you, all these your trades will close in profit. You will not incur any loss. Then let me say that you are approaching TP. Your market is moving smoothly. There was a reversal, there was a pullback here, and you had entered. You are entering a third entry, and the market is moving smoothly to your TP3. This is what you do. You also move all these entries to 30%, to 30 pips below your take profit 3. Let me say it is even somewhere here. It is even somewhere here. It means that when the market reverses back, it is going to close all these your trades in profit. But when it hits your TP, all these trades will be closed in profit, and you could have killed or hit all the TPs here. That is how you avoid. This is how you avoid. Or this is how you enter all trades and maximize all profit in just given trade. If you have any question, you can comment down below so that I can answer it. We want to go to the practical part of it. That one was just an observation. Let us now go to the practical part of it. You can see this is NAS 100. The first thing you identify is the market is upward trending. Then the next thing, the market is making high lows, low high, high lows, low high, as you can see. Now this one is what we can do. From here, you take a point. You can, as you can see, sorry. Let me remove everything. Sorry. I think this is, let me remove all the drawings. Drawing is very hard, guys. It is very hard. Now this is from here. This trend line, remove this trend line. Why is it stopping? Then this one is hit. Then the second trend line is here. Yes, that one is nice. Now, as you can see, this market has been making high low and low low, high low, low low. This is what this market has been making. The way I told you, it is very direct. This is you mark, these your points, and mark it very well. Then you entered here, your first entry, market goes, reverses back. Second entry, market goes, reverses back. Third entry, market goes, close, take profit. It reverses, hit, breaks, retest, moves downward. Very easy to nini, very easy to trade, because I had told you in the previous videos that when the market breaks a given structure or a trend line, that trend line or given structure should be retested for you to avoid trading in fake breakouts. Because let me say somebody who was here, I know some people entered this trade here. Let me say some people entered this trade here. Yes, they entered this trade here and started selling because of that bearish momentum. Yes, they made some money, but remember it was on a short sell. It was on a short sell. As you can see, there is a key zone there, and there is also a key zone there. This was a short sell. This was a short sell. The people who got this market very well are the people who came and waited for the retest, started selling this market, and they sold up to here. That one is very many pips, as you can see. They made lots of money. They made lots of money. Now this continuation chart pattern is very easy to trade, guys. It is very easy. As I had explained for you there, all the entries you can have confirmed it in the structure of NAS 100. If you have any question, comment down below there. I will be able to answer it. If you want a video for us to do for you, a video of a given structure which is disturbing you, or any forex question, kindly comment below. We'll be able to do it. Thank you very much. That was my time, and enjoy the lessons. The next time we are going to do a lesson on a reversal chart pattern. Thank you guys, and God bless you.